Nothing said on the Touchgrass podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions only, not financial advice or necessarily the views of the Touchgrass podcast. Our hosts, guests, and the Touchgrass podcast team may hold positions in the companies, funds, or projects discussed. Enjoy the show.
All right, GM, welcome to another Touchgrass podcast episode. We're continuing our fundraising landscape series. In this series in the past, we've had a bunch of investors come on talk about how the fundraising landscape looks in crypto right now. Today, we have Amit from the Borderless team. Amit, welcome to the show.
Hey, Rachit, KG, thanks for having me on. Um, so maybe we can just to give a quick background on myself. I've been in the investment space for a decade and a half now. Been with Borderless coming to around 10 years now. Prior to Borderless, I was with, I've been with Borderless almost like 6, 7 years now. Prior to Borderless, I was with another VC fund. And then before that, I was in the US, did my MBA from there, and then was in my last role was working with a pension fund out of Chicago. And then when I came back to India, my dad had some health issues, so wanted to be with family. That's when I got into Web3. Actually, interestingly, that was the time of the ICO boom, 2016, 2017. And my very first investment at that time was a company called Elrond at the time, which is now branded to Multiworks X. I mean, that did extremely well, and that's how it started. Then we did Covalent, Persistent, Bioeconomy. I was good friends with the Woodstock fund founders. Helped them create a fund structure. Was an advisor to them. Then eventually now they have I'm also an LP there. They moved to Dubai. So that was my start. Then and Borderless was candidly a bit of serendipity. It was starting, and I wanted to move from pure play VC style investing in India, Web2 VC investing in India, to more on the Web3 side. It just made a lot more sense, and for me, Web3 investing was like normal VC investing on steroids. The highs and the lows are just too highs. So that's so yeah. So that's how I got in, and yeah, that's a bit about me. I can. Do you want me to give a quick background on Borderless as well?
Yeah, for sure. I think what is typically helpful here, Amit, is if you can tell us like what the fund size is and like
Yeah,
what your typical check size is. So think about the way that we think about this series, any budding entrepreneurs or projects that are looking to raise and they want to reach out to you, they can basically use this pod to
hundred
sort of
percent.
cater their pitch to you. So before you do that, like I just want to emphasize, like I've known Amit for like the past 2 or 3 years, worked very extensively while I was at the Wormhole Foundation because Borderless managed the multi-chain fund and still does. So I built a very close relationship with Amit there. We used to share a lot of deal flow back and forth. So I'm very happy for him to finally be on the show. But yeah, Amit, please give us the context on Borderless. Like,
Sure,
what
sure.
kind of deals do you look at? What's the check size? All that.
Yeah, yeah. So I think the best way to think of Borderless is like an umbrella of funds. Each of this umbrella of funds ranges anywhere from, right now the size is anywhere from 50 to 100 million. And right now there are three active funds which are deploying. So some of the earlier funds are fully deployed, and I can talk a little bit about the history. But right now the three active funds, one which you mentioned, the cross chain fund, which is very unique. It is anchored by Jump, Wormhole, and what is this is the only fund in the ecosystem which has you know uh, more than 15 layer 1 layer 2s as LPs that have co-invested, that are on the same cap table, which usually it is very difficult. Usually these chains are kind of a little bit competitive. So it was a I think it was a long journey to get all of them in the same cap table. These include all the key ones like Solana, Polygon, Aptos, Avalanche, Monad, and so on. So there we are almost at this point, which is like mid of 2026. We have way ahead. We have just extended the fund by another year. but I think a lot of the dry powder left now we have reserved for follow on. So we are going to make a few more fresh investments, um, but they are going to be far and few bit more selective. The usual sweet spot for us is $1 million. We like to lead rounds, come in early. Um, when we lead, we usually take half of the round, pre-seed, seed primary, and on the lower side, the check is 250K. We have gone as high as 2.5 million. Sweet spot is around the mill there. Uh, the other fund which is active is Deepen Fund, Deepen Fund 3. Very similar to the check size and all. The thesis, of course, is more focused on Deepen side. And then we are in the process. We have done a first close, done a few investments from our, I would say, agnostic fund called the Borderless Venture Fund, which is the next, kind of, you can think of it as V2 in Borderless. That is going to be a little bit more slightly post revenue deals, targeting around 2 mil sweet spot, and primarily coming in a little bit later than seed. It can again come in the seed as well if it's a very good deal, but ideally the target there is more on the pre-A and then going to A rounds and beyond. So prior to this, the way Borderless started is it was started by two gentlemen called David and Arul, both of them serial entrepreneurs. Very, I mean, complementary styles. So David is more, so Arul is more strategic. David more, fully focused, hands-on. So they complemented each other very well. What is interesting is if you see both of them, you would never feel that they are partners. Like one is an Indian, tall, dark guy, South Indian. One is Argentinian, and so it was a very unique kind of combination which is difficult to find. So David is more kind of the OG. He has been in web3 since 2011, started a few payment companies, sold them. I think the last one he sold to Napspers, and then got in and ran his own like blockchain fund again. So he used to tell us stories where they used to send money via transfer to Hong Kong and then get back USDT. So like back in the old days, even before you had like Binance and on ramps and off ramp and so on. And Arul is, he sold his company to Oracle, so serial entrepreneur, and very strategic. So we start, but our core DNA, almost everyone in the team. So I'm one of the partners. I think we have each of these funds which I mentioned. They have a different lead partner, and then we have a team below them. But each of this lead partner is responsible for that fund. So earlier we had a couple of funds in the Algorand ecosystem. From there, we are early investors in companies like Block Demon, Securitize, Centora, number of them which are now going public. And then we launched this cross-chain fund, the Deepen fund, and then the cross-chain fund, and so on, which we spoke about. Our core DNA is very entrepreneurial. I mean, we like to. In fact, we have done some investments where we had a great we believed in an idea and we actually found an entrepreneur to come and run it as a CEO. So we actually kind of co-founded the company with the entrepreneur, and so we believe in being with the founders. Like a classic example is Securitize. We Securitize now is a kind almost like a household name in tokenization, especially in North America. But there were a lot of rough patches early on, and we kept investing, kept going through the ups and downs with the founders, and kind of we have great satisfaction now to the point that it has reached. And so and the the when when you have been with an entrepreneur through those early hard days, that journey then comes to a point when the entrepreneur and you developed a very special bond. So that is very interesting
Yeah,
to see.
I think KG, also for your reference, like Amit also does a lot of portfolio support. Like I think Borderless excels there. Like there's a lot of, I would say, like personal mentorship, like not even for the founders, like even for me as someone who's like head of global expansion, maybe like Amit used to help out, used to give me a lot of guidance on what we should do there as well. So definitely seen that firsthand. Amit, obviously you've been around like for 6 7 years doing this at Borderless. Can you tell us about why this cycle feels different? Like if we look at like past cycles of investing versus this cycle of investing, what has changed according to you guys?
Yeah, I mean, this cycle is very different. I think it has made a lot of us, and I've been speaking to other other fund founders, partners in other fund. I think it has made a lot of folks in Web3 question fundamentals basically. I, I think some key differences in this cycle is one, in almost every cycle, after in the middle of the cycle, in the middle of the bull, once Bitcoin has reached the all-time high, usually there is a alt cycle. Altcoins, kind of go. I mean, there is a risk on mode and there is a full-on alt cycle. Um, this didn't happen other than a few selective coins like Hype, maybe Syrup, and a few very selective coins. Um, this did not happen for majority of the alts, which is something which we totally missed in this cycle. You know, the second thing was, I think what the cycle started with, if you go back in time, with early back in January, with ETFs, institutional, Bitcoin ETF coming in, with institutions coming in, launching new and new ETFs. I think, Solana ones, other ones, and then the DATs came in and all those things. So this cycle was marked by, uh, the flavor was institutionalization of Web3, and that kind of continued, which is, by the way, a very good sign, because with like BlackRock, all the Fidelity, all these other major funds coming in, creating Web3 products, that does give a very strong solid base. It helps bring mainstream to Web3. But what was interesting was that never expanded into a like alt rally, which usually happens in every cycle. I think that was the interesting piece. The second interesting piece, I think, what is happening is, like what we are seeing in terms of talent. Like this is something which, you know, I see with the portfolio companies, what is happening with the talent which is coming in. Um, and in parallel to Web3, like, AI is seeing an even bigger cycle which is happening. And what is happening is, what we are, like, I'm seeing on the ground is a lot of organic, very strong entrepreneurs, some of the brightest minds, which which would in another world have come to Web3, are now being pulled towards AI, like the Anthropics of the world, OpenAIs of the world, and so on. So that is an interesting, kind of mix. So I think as we come out, I again, I think, kind of now we are again seeing the downs of Bitcoin and the cycle. Once we come back on the upside, I think what will be very interesting to see is how we are able to attract this strong talent. I think fundamentally, again, you can see some few pumps, but what really drives any market is the ability to attract strong talent to come and build solid companies. I think that is very critical, and it is important to see how we are able to do that in Web3.
Yeah, I think like especially on the retail side, one of the things was like they have come in and you saw a lot of on-chain kind of things where it was very unfair for the retail. Like Trump launched, everyone came in, they bought it at $70 and they lost a lot of money, and they were like, screw crypto, let me just go ape my bags into AI coins that will just go up forever, right? So, and once you see that, and crypto hasn't done anything that caught people's attention, I mean, I would say it's very different, and there have been opportunities over the last 6 months, even though this timeline's probably depressing and it's not so fun. But there's still been many opportunities and good companies building. But it's one argument is the space is getting more mature. Another argument is this is just another 4 year cycle, and we'll bottom in October or something, and we'll go up again.
I mean, out of curiosity, do you guys hold liquid positions at Borderless as well?
Yeah, I think from our funds we do have some liquid positions now. uh, uh, but as of now, all the focus is going to be private venture style investments, and even when we do take some liquid bets, it is primarily with a venture mindset. Like, so it's not like going to be market neutral or long short or anything. It's going to be a pure venture play on, taking long positions.
Got it. Is there like, are you also like many people are like focusing on stable coins, perps, and credit? Like any other outside of these consensus buckets, anything you guys are focusing on category wise? I know that you guys were early on to the cross chain tech, but is there anything that you kind of are foreseeing for the next cycle that would be like the foundation of protocols or apps or the infra layer? Any kind of focus that is not consensus right now, but you guys are paying attention to?
I think, see, right now, so some of the main areas are which you mentioned, tokenization, RWAs, that continues to be a major, kind of focus right now. And one of the reasons is it ties very well to the whole institutional thesis, right? With institutions coming in, they naturally want to talk, like BlackRock is tokenizing their funds on securitize. Similarly, other big houses are tokenizing some of their funds. So that's a natural push towards RWA tokenization. But what we are also looking at, for example, we are speaking to a couple of firms which one of the challenges in, so, and tokenization is not new. We actually looked at RWA's tokenization even in the past cycle. I think one of the things we realized from there were, I'm just giving an example. Like there were some fundamental issues. So one issue was there was no secondary liquidity. So for example, now you go and you, tokenize real estate, right? You tokenize a house or something, convert it into shares. So you get the primary tokens. The challenge is that there is no secondary liquidity. So there are some, founder like entrepreneurs now who are cracking on that problem. Like, for example, we are kind of speaking to multi-liquid fission, which are basically again um, kind of trying to solve the problem of secondary liquidity in tokenization. And there is a huge push what we are seeing in terms of private credit. So private credit again in the tradfi space is like a huge growing area. And what is very interesting is a lot of founders are focused on tokenizing and bringing private credit on chain. Then moving from that, the other areas we are looking at is, one is privacy. I think with the whole Zcash pump, and even like what that continues to be an area which I think will be important. It is very interesting where on one hand the whole premise of Web3 was uh, you know um, uh, kind of permissionless, and kind of not having any centralized control. And then there are chains like Canton again, which are building like very focused permission chains for these institutions. So again, I think it's a very interesting way how this stuff is evolving. And I feel when we feel that there is a space for both, there will be chains, permission, kind of chains where big players like JP Morgans of the world, Morgan Stanleys of the world come and launch their products on chain, as well as there will be there will be a space for total permissionless DeFi and so on. But so that's another area, privacy. The other area is which we looked at a bit. We spoke to a few companies. Is FHE. It's very interesting, but again, we didn't get conviction for this cycle. But I think there is some very interesting things going on in that space. Um, and the other one, which we are very bullish about, which we have done a few investments, is stablecoin and stablecoin infra. So we are early investors in a bunch of stablecoins. Of course, small positions in Circle and all, but I think a bigger positions in the Canadian stablecoin, Turkish stablecoin, and stuff like that. Some of these other countries. And um, what is interesting is that is an area I think which again, like, which we feel we are very bullish about. If adoption of Web3 has to grow, stablecoin infra has to be very prominent. And one final one was this. We spoke to a few companies, actively exploring this, kind of quantum space as well, quantum compute and so on. But candidly, like, we feel that that is not a very acute problem, for this cycle. Although there are some solid founders building there, we don't feel that this is the right time, to invest there. We feel that it still has a long way to go, and by the time that actually becomes a problem, there will be several solutions, which will be available in the market.
I think like
Thanks.
that's a narrative that is growing, and as you said, like Zcash is kind of leading the charge there, and they have done this. Mythos are it as well. But one thing that I want to highlight that you mentioned, Amit, is the credit system. I think like if people are betting on this AI cycle, it's not a bubble. It's gonna keep growing. It's gonna keep being productive capital. Everyone will rush to get more and more capital for whatever reasons, like for buying more compute, buying for human capital, whatever. So the need to take, I mean, they can't go and everyone raise $50 billion or $60 billion, like these frontier labs. And startups, they need more and more money, so they'll probably take loans against equity or something like that. So I see that the credit rails, maybe a bank is not going to give you a loan, but there's this alternative thing in crypto, or like that uses crypto rails. Maybe that's more interesting, and you get interest on top of these assets. So that's like something I'm foreseeing, where I don't know, like I don't own any of these assets, but like something like Maple or Morpho, like that are kind of building the infra for some of these crypto credit rails. I see that being a narrative, maybe not right now, because everyone is kind of bearish DeFi in general. But to your point, I think if credit expansion happens at some point, which I think it will, that will lead to the next bull market, because every time credit kind of went, like we had all these BlockFi, all everything that blew up, that kind of helped us with the bull market in 2021. We'll see something like that with crypto credit system, maybe this time more decentralized. But yeah, I agree with you that other
KG,
things.
how can you give us an example of something that blew up and then be like, we're gonna see that same thing happen?
Those were centralized, right? I'm just saying this decentralized options of that
I
with
mean, it's the same thing that David from Chip was saying, right? Like they were able to give a credit just line against their GPUs, and they're just seeing immense adoption for that. Amit, I do want to circle back onto the local stablecoin thing as well. When you talk to some of these founders who are building local stablecoins, like obviously these Euro stablecoins, like these stablecoins have not found adoption so far. What is the thesis from you guys or from these founders? Like, why will this work in the future?
A very interesting question. In fact, just before this call, very candid, we were speaking to one of the founders who is, targeting this kind of in the South Asia, Southeast Asia region, right? Um, See, what is happening is in Europe, what we have seen with the conversations with these founders is with Mica coming in, there is a lot of US has changed with there is a lot of clarity now with Genius Act and so on coming in, right? So there is a lot of clarity, regulatory clarity in US. I think Mica is one of the big ones which is getting similar kind of clarity in Europe. And with that coming in, a lot of these stablecoin providers are getting Mica licenses, and as they get that, they are then kind of going to do. So the earlier one of the friction point was not having regulation. Small businesses, retail to some extent, institutions were not really clear, like are these rails even legit. Now with regulation coming in, those are becoming legit. So that is a main kind of shift. Um, uh, in terms of other jurisdictions, like by the way, the Turkish stablecoin which I talked about, by Lira, now I recently caught up with the founder. They are getting licensing in Turkey as well. Earlier they were again offshore BVI entities and all. Now they are getting licensing in Turkey as well. And so for the for the new regions like Southeast Asia, India, and neighboring countries and so on, um, uh, there is regulatory there is not regulatory clarity, there is a regulatory vacuum. But that is why you are able to get these very strong founders at valuations which are reasonable, because India definitely has a very strong crypto adoption. Like there are so many people who are using crypto with FIU oversight coming in. All of those people are doing it kind of now slowly, that they are trying to at least have some sort of regulation there. The thing is, for a fully legit, fully regulation backed stablecoin, that is not there yet, and that is something which a few teams are targeting. And what we feel is this is a great kind of almost like you know you are getting opportunities like this at a very high discount now, just because regulatory clarity is not there. So for example, if you are getting an opportunity to invest in a project, I don't know, at 30-40 million now, when regulatory clarity, and by the way, a lot of these founders are actually in the sandbox and they are way advanced, like they are working continuously with the regulators and so on. Once the regulatory clarity comes in, the valuation will be easily at least 5x of that, right? 200 mil odd and so on. So that is again, it's more of a venture style kind of play. It is almost a regulatory risk that you are taking, that eventually regulatory clarity will flow from US, Europe, to Southeast Asia and other jurisdictions as well. So that is the play here. And the other interesting point is, for example, we'll take India. I think it is just timely because we just had like an hour long discussion internally about this, on like, for example, in India, you almost, there is so much of ban scrutiny. Forget about Web3, even in Web2, for any dollar or rupee which is leaving India. But I think for money coming into India, the government is very open and they like to see that. So a lot of companies in India, you take Mudrex, for example, or there is a company with the same name as our Borderless, for example, or there are other places which are working on getting dollar flow coming into India, and instead of being on Remitly or Wise, they are working on other payment rails where the premium, the uh, uh, exchange rate which you can get is much better than some of these other players, right? And the reason they are able to do that is because they are able to get liquidity via off ramping, and versus like the standard Swift rails which a lot of these other players use. So that's the play here. I think India already has a huge appetite in terms of remittances, in terms of dollar flow coming in. So that is a very low hanging fruit for a number of these founders to use crypto rails instead of Swift rails for getting this money in.
Okay, that makes sense. I think it's more like you saw the crypto cycle evolve and you saw how clarity has helped some of these other projects
Yeah,
build, and then it's like you're taking a bet on like regulations getting better in like the next few years. But
yeah,
this has been awesome. I know we're getting up to time.
yeah,
We've talked so far about like all the right bets you've made. You talked about Securitize, you talked about Blockdaemon, you talked about all these amazing companies. I want to talk about the deals that you missed that keep
yeah.
you up at night. Like, is there one that got away that keeps you that you keep thinking about in all these years of investing?
There are actually a number of them. I think every investor worth his salt will have like a very solid anti portfolio. So we call it like anti portfolio, where they will have a good set of bets. But I think what is very interesting, the way I look at it is, for each of those anti portfolios, whatever the key learnings we got from there, right? So I think there are several of them, but if to pick one, the key one I think, which is might be a good example, is grass. Like, we had an opportunity to invest in grass, and which is like a deep in play, I think way early, and it would have been almost like uh, you know uh, 50x kind of a situation. uh, the thing was, they had so our one of the other companies in our portfolio, they had some past working with grass, and there were some issues going on there which they were trying to resolve. And so that kind of put us a little bit on the back foot, and we were not able to get full conviction to go ahead. I think so that is something which, I think for us, the key learning from the, and there, one of the other things that happened is we got a little, those issues which the company in our portfolio and these founders were having, that made us a little bit slow. And that time actually allowed that deal to slip away from our hands. So that was the other thing we realized, that you have to have conviction, and you have to develop that conviction in a short amount of time before you actually lose the deal, right? So, and maybe the third learning from that thing was that, you need to keep an open mind. Sometimes you can't let like one thing, if you are otherwise kind of sold on the opportunity, if everything else aligns, then you should not let like one point maybe stop you from moving forward.
Yeah, that makes sense. Awesome, Amit. This has been great. Thank you so much for all the wisdom.
Sure.
I think if there are any founders listening in who want to pitch to Amit, he's always responsive on Twitter and Telegram. So definitely reach out. Amit, thank you so much for the time. This has been great.
Thank you so much for having me. Bye bye.
Awesome.
Bye bye, Rajat.